So, good evening. My name's Tony Henderson. I'm chair of tonight's event because I decided that this topic, which I absolutely love and I've worked in this space for a few years, needed revisiting. And I'm very delighted that we have Ultan and Oscar Pacey alongside, who'll introduce themselves in a second. My particular background in this space, we ran our first event in this space nearly 7 years ago now. And it was a fascinating debate. We were in the maths department at Oxford, which I thought was quite appropriate. And one of the debate about how Bitcoin worked and the arguments about whether Bitcoin was good and bad and whatever went on. But the interesting point at the end of the evening, I remember, is someone said, "Oh, I should go buy some." I said, "Well, how much are they?" $240 they were back then, and they are now, even despite the market things, they are now around $30,000. So it's kind of interesting how the world has moved and how it works. So they're just probably worth outlining some background for those who are not familiar with. The Bitcoin white paper written by Satoshi Nakamoto was the first version of blockchain that went live in 2009. Oscar's going to talk about that in a little more detail. He's the Bitcoin specialist in this, but that started the industry of blockchain and crypto. And then the second piece that I think is worth mentioning is the launch of Ethereum in 2014. And what made Ethereum very interesting was the ability to write smart contracts onto the blockchain, which allows you to effectively create your own tokens in a secure and predictable way. And what makes that interesting is these tools allow you to create virtual monetary systems. Now, as I sit back here, my background is in media technology. That's why we started, Claire and I and the team started Oxfordshire Technology and Media some 14 years ago. And 20 odd years ago, it was the dawn of I don't know how many of you remember Napster back in the day, and pirated videos, and the various technology that went on in that space, BitTorrent, and the fights between digital rights management and how you could make the industry legal. And I look at that, and at the time the broadcast television said, well, it'll always be satellite, it'll always be cable, it'll always be terrestrial. And slowly it's moved into a world where actually people, I just want to watch, I don't care what it is, I don't care whether I'm streaming it, watching it, I just want to watch my stuff. And it feels very much like today, which is why I thought it was very timely to have this event. Although mistakenly we caused it the rise in crypto, despite some of the interesting market antics in the last couple of weeks. It feels that the technology exists, and it's just finding the right actors that make it work. And I think that's why we felt it was worth exploring tonight, because there's a lot, despite all the headlines, it's always the case. All the headlines is this, it's that, and the other. The technology is incredibly powerful. It's very exciting. It's very part of the new wave, and if you look what happened as we went from the idea of pirated video to pretty much everyone, I think, has both a Netflix subscription and a Spotify subscription, something similar, am I right? Has anyone not got a streaming subscription? That's where the world's come to. Okay, fine. You're always the rebel. So, moving on. Ultan, do you want to just give a brief introduction, talk a little bit about what you do, and go from there?
Sure. So I always find it amusing how we're always using these terms new and the next big thing, and yet, I don't know if you feel this way, Oscar, but I feel like, I've been in this for a while now, and we're reaching a culmination point where crypto has become, almost accepted. So I guess do find that a little bit unusual, the positioning, but my first foray into the crypto market was I think around 2014-15. I was involved with a startup where we were enabling people to buy and sell trainers secondhand, which was quite a lucrative market at that time. But fakes is a big problem, and we thought, well, hey, why don't we tokenize these sneakers and put them on the blockchain? We thought it was such a good idea. I actually remember calling up the head of counterfeits at Nike and telling him how great this idea was, only to realize he was actually an ex-policeman trying to stop people selling knockoff Nikes on the street and had no idea what I was talking about. So this was sort of, I guess, way too early, I figured, to really be entering the market. And then it was in 1718 that ICOs arrived, and that was when I set up Saxon, which is a business I run now. It's a boutique investment and advisory firm that focuses on helping crypto entrepreneurs to raise capital, to essentially launch their project successfully. We provide all kinds of consultancy support. We invest in those projects off our own balance sheets. And then we also have an infrastructure business where we're running nodes on their network as well, if it supports that option. And I've had the joy of working with Oscar on a couple of deals, so I'll hand over to you.
Thank you, Ultan. So my name is Oscar Pacey. It's a pleasure to be speaking with Tony and Ultan here today, and thank you for your time. I run a cryptocurrency blockchain consultancy service and advise startups in general, sometimes small projects within larger firms, but it's usually the startups, on anything these firms need help with regards to launching some kind of crypto project, which could be anything from the incentive design around their tokenization scheme, whatever that might be, to protocol design on their software stack. And there's a huge amount of excitement and demand of people throwing ideas into this big melting pot that's crypto. And the service we provide is to try and rationalize those ideas into something that's more tangible and self-sustaining. And yeah, I suppose the thread that I might pull on tonight, it will be all around decentralization, what the essence of these missions are. I think so.
Okay. Cool. Well, what I think probably a good place to start is, Ultan, just going back to some of what you were talking about in terms of, how you're doing. How would you describe what is a crypto asset? How would you define it as how does it have value in terms of if you're looking at it from an investment, and how would you set about formulating one?
Right. Okay. Well, there's kind of two things. So how does a crypto asset have value? And then the next part is, like, how do you distinguish between different crypto assets? And on the crudest level, I think for anyone in the audience who is just still at the start of their crypto journey, so to speak, I think that the crux of the innovation is really around every file on your computer you can copy and paste, right? And you can copy and paste it to infinity. I think of crypto assets as really a breakthrough in the sense that they're the first digital files that you can't copy and paste. So on a fundamental level, why do they have value? Because they are scarce. And then once we've understood that they are scarce, we can then start to distinguish between the different types of assets and why one might be more valuable than another, right? Scarcity isn't intrinsically valuable, but it is often required for there to be value. And so what we've seen over the last few years is probably a shift in the way that investors are thinking about what kind of crypto assets are valuable. Initially, I would say it was very poorly understood, and a lot of assets that were really more appropriately like payment mechanisms. You could almost compare them with a book voucher. Those are the kind of things that people were buying, and we discovered in 2017-18 that a lot of them had very little value. What I think is different with some of the crypto assets that are emerging today is they carry many of the same qualities that people ascribe to good securities investments. So they might have cash flows, they might have governance rights, and when you're able to speak the language of cash flows and governance, wow, suddenly you start to appeal to an equity investor base. Or yields is another thing. Bring in the bond guys as well. But essentially, crypto assets today, regardless of what you may be told or may read, that they're not backed by anything, the ones that are gaining the most momentum are underpinned by fundamentally sound business models with strong cash flows that are redistributed to the token holders in the same way that, you know, your favorite FTSE 100 company sends you the odd dividend. And that I think is the big distinction between crypto assets like Bitcoin and other, sort of, we call them layer one networks that provide an infrastructure, and then, to be crude, other businesses that exist on top of that network, more like companies. So yeah, bit of a ramble, but if we could put them in those two categories,
I thought that was actually very helpful.
Okay.
Because what a couple of ping down is, of course, is one of the thorny bushes that crypto deals with is the idea of regulation.
Yes.
But presumably regulation, if people can clear about what the value the asset provides, and the regulatory requirement becomes much more straightforward. Oscar, you've worked in the financial services industry. Do you want to just talk a little bit about how the traditional world of regulation looks at the crypto world, and what frightens it, and what makes it sensible, and where does it kind of intersect?
Yes, very much. It's maybe worth thinking about to use a cliche, the paradigm that crypto represents versus everything that regulators are already used to. So it's more or less the financial landscape that we're talking about. Crypto is a financial tool. Maybe it can do other things here and there, but it's usually at some level tied towards, as Ultan has said, cash flows and currency and commodity, those kind of notions. In all of traditional finance, things are structured hierarchically. You have governments and regulators at the top, even supranational organizations in some cases, banks and brokers and so on underneath, in making up a kind of Christmas tree of hierarchy, whether that's to do with law enforcement and things like money laundering, or it's to do with the digitization or the financialization of assets, including custody of things. For example, we'll keep fine art in a specially designed vault and then trade the rights to that through databases and so on. That nature means regulators don't tend to focus so much on the assets themselves, because the assets have some root within the physical world. They are lumps of gold, they're elemental things, or there are artworks and so on, to use the example again. But they do worry about the business that occurs on top of those assets. So the relationships people have with banks and so on is the complete focus of regulation. And it's also a very easy way to regulate. You can license businesses if they want to set up on the high street and put their brand out there. They're easily found. And if they're doing things that aren't right, they can be captured by the legal system and processed appropriately. Then crypto arrives on the scene, and it's a kind of milieu of strange alien concepts that we're still as a society absorbing and getting accustomed to. But within that, as Ultan's already referred to, you can have equity-like properties, you can have bond-like properties, commodity-like properties. Bitcoin, to use the canonical example, is, in my opinion, almost identical to any other sort of raw material commodity. It works, for all financial intents and purposes, a lot like gold does. It's self-regulating in the same way that gold abides by the laws of physics. Bitcoin abides by its sort of socially emergent rules, which is a kind of software thing notion, I suppose. But as far as regulation is concerned, it is what it is, and it doesn't really change. And there's also not much interest in it from a regulator's point of view. What does matter is all of those interactions that people carry out using that. So the regulation really is just going to be copy and pasted over, in my expectations, with a few tweaks here or there for the minutiae of managing these assets. But by and large, I don't expect there to be great difference. Now, there is the notion of prohibition. If these systems are deemed to be competition for things that we know and trust, and they're a bad thing, then the only teeth that a regulator really has, ultimately, is to say interacting with it is illegal. And that's not such a stretch. We already I was trying to find an example of this on the way up, and the best one I could come up with is magic mushrooms are a part of the natural world around us. They grow out of the ground all over the planet, and there's nothing a regulator can do about that. Whether we like them or not, they're just there, and they always will be. They'll far outlive us, probably. But for a while, they were prohibited or certain uses of them were prohibited, as in processing and drying and all of that, and the trading of them, which, okay, we understand that's traditional regulation, but it wasn't good enough. And apparently in 2005, the law was changed that possession of anything with the psychoactive chemical in it, psilocybin, was prohibited, jailable by up to 7 years. I didn't know this till an hour ago. So if it grows in your garden, I believe you can be arrested for 7 years. So it's kind of nuts. Like that's a very extreme last resort that a regulator has to go to. And I don't expect in stable democracies that will happen within crypto. I think we'll just reproduce something like we already have.
Yeah. I was going to say there's some great points you've made there, and I just want to pick at a few of them. Not the shrooms, but that was a good one. The first is I love the analogy of Bitcoin to sort of precious metal or commodity. I think it's a very appropriate analogy, and I think another suitable analogy other folks could take away from this evening is for the second asset, Ethereum, who you mentioned earlier. I think of Ethereum very much like oil. We need oil in order to power the goods and services of our economy, right? And that very much, in fact, we even call, when you're executing a transaction on the Ethereum network, we even say you need gas, which is a small piece of Ethereum to pay for your transaction. So obviously in periods of high demand or economic activity, you would see, obviously the Ethereum price will go up because lots of people want to use the network. And this is a really, I think, helpful approach to take is you have your gold or precious metal type Bitcoin, you have your oil like Ethereum, and then you have your businesses that perform specialized functions on top of the Ethereum network or other competing networks. And I think if that's an analogy that makes sense to you, is one that I hope can sort of at least allow you to sort of segregate or pigeonhole certain assets as you make your way through the ecosystem. To the point on regulation, crypto was obviously born a long time ago, but really gained massive traction in 2016 and 17 precisely for its regulatory arbitrage qualities. You could, I was just having a discussion with someone about this before we came up here, but you could essentially raise money from anyone, not just accredited investors who have a certain high net worth or sophistication and understanding of investing, but ICOs, as they were known, or initial coin offerings, allowed people for the first time to collect money in a crowdfund type way, but in huge scale. So, tens of millions were raised from people who were essentially anonymous. You knew nothing about them, not even an email address, let alone a KYC or anti-money laundering check. Obviously, these things have changed, and now practices have improved, but I think it's precisely that component to crypto that has sort of driven a lot of the adoption. And indeed, it will be interesting to see, what happens in the next few years. But it very much feels, at least in the UK, that the regulators have been happy to sort of let this happen and say it's not a security, therefore we don't regulate it. Now, I don't expect that to remain their position forever, but certainly there's some fear and trepidation on how best to regulate this. So I have to wait and see. Yeah.
Okay, thank you. No, that's very helpful. I just want to sort of segue across slightly without sort of getting too much into the weeds. But if people, and this is, actually, I think probably one should say, this is not investment advice. But one of the things I just, people often ask me, what is, how do you start in that, to sort of think about investing and understanding it? If you're doing traditional financial markets, well, you go and buy a copy of the FT or the Economist and start to read about stocks and shares and talk to a broker. How do you sort of think about getting an understanding before you even invest of how to do that? I mean, where are your favorite sources of information and guidance and that you would follow if you were sort of thinking about coming into this as a sort of investor, even from whatever spectrum?
I think the first question people need to ask themselves is, what are their goals? When I was personally starting to invest in crypto assets, my goal was to take large risks and try to build wealth aggressively. Someone, that was me as a recent graduate, someone who might be at a different stage in their life would have different investment goals. So I think understanding your risk appetite is the most important thing, because then that disqualifies, potentially huge swathes of the crypto market, depending on your risk appetite. So that's like the most important thing. Understand what you're trying to get out of this process before you blindly start entering projects. The second thing is, if you are lucky enough to make money, just make sure you have secured your assets effectively. Make sure that you've taken adequate precautions. I would be reticent to recommend any particular assets to anyone to buy, but I think setting clear objectives for yourself will help you to segregate which assets are more suitable than others, and then whatever you're using, a hardware wallet or a trusted exchange, just make sure you do your research on how you're going to look after that money. Because what's liberating about crypto assets is you take back control of your money. It's a double-edged sword. If you lose it, you can't call up customer service. Those would be my suggestions.
It's a very interesting topic. So I can't really add any more to what Ultan has said. I agree with everything there. You've really got to know what you're looking for. Don't just dive in and randomly throw your money into pots. I think that won't end well. And that doesn't mean if you don't already know what you're looking for, then don't. It just means be sure of what your interests are. If there's some function you're looking for, perhaps that's a good place to go. And then your second point about taking custody of these assets, which is something you can do. Unlike in the stock market, you need a broker, you need a custodian, you need a registrar, someone to rely on. In the crypto assets world, you can download essentially the asset to your digital devices and keep them safe yourself. And if you're not doing that, you're really missing out on the one of the fundamental value propositions of this universe. ETFs, however, do have a role. So ETFs are the bridge between crypto assets and the infrastructure of stock markets. They are, if people aren't familiar with an exchange-traded fund, it is a company incorporated like any other, which has the sole function of owning the assets that the end investor wants to invest in, and issuing shares onto the stock market such that people can trade exposure in and out of the price appreciation and so on. So this serves perhaps two niches of the market. Those who for some reason aren't allowed to or aren't permitted to own crypto assets directly because of their internal policies or even regulatory policies. Or those who are unwilling to, because everything that we've just been talking about, owning your own assets, it kind of scares people. We're used to using banks for that. But ETFs aren't, although it's a simple product, the regulators have a bit of a hard time with them when it comes to crypto. It varies around the world, but the market everybody is watching is the US. And various firms have been putting applications into the regulator since 2000 and early, I'm not sure, maybe 15, 16, something like that, saying we'd like to provide that function to the market. And they've said no every single time in the US. In Canada, there are some now. In Australia, there are some, and so on and so on. The UK kind of had one, and now they've closed that down or restricted it from the UK. And just last year, I think it was, they said, okay, you can have an ETF in the US market, which is indexed to futures which track the price of Bitcoin. And there was rejoicing, everybody's very excited, and the cash inflows to that ETF were massive. I forget the numbers, but it was bigger than any of the others, I think. At least for the first period of, for the launch, it was the largest I think that we've ever had. I could be wrong. Since then, and the crypto markets, of course, it's dwindled a bit. However, the problem with an ETF-based, a futures-based ETF, is by not owning the bitcoins themselves or the crypto asset that it might be, but owning futures contracts, you invoke what's called the roll cost. Futures are time-limited contracts, and when it expires, you need to then roll over into a new contract, and again and again and again and again. And ETFs are often held as long-term investments, and that the fees are very high at the moment, and this roll cost eats away at your capital. So they're very capital inefficient vehicles as they stand in the US. So everybody is still asking for what they call a spot Bitcoin ETF and Ether ETF and so on, all the other crypto assets. And the reason the regulators don't want it is because they think that the markets on which the Bitcoin trades underneath are opaque and offshore and unregulated and dangerous, which is kind of silly because the futures, which are okay, also are impacted by those offshore scary exchanges. So we're in a kind of, we've made a lot of progress, but regulators are still worried about them, let's say on average, in the UK and the US. So I don't know where that's going to go, but the trend seems to be that the spot Bitcoin that everybody wants will arrive sooner or later.
Okay, so out of New York, there's a young guy called Jack Mallers. He's 27, and he's built a tool called Strike. And what I think is really interesting about this, so this sits on top of Bitcoin and the Lightning tools that sit on top of Bitcoin. And you have a wallet that looks very much like a Strike wallet, but it has no banking backend. It runs entirely on the Bitcoin and Lightning network. And I think it's fascinating, but I'm not as good at Bitcoin by some margin as you are. And I just wondered if you could just talk about that for 2 seconds, because we had the banking crash in 2008 and how the banking system's connected. This is entirely separate from how the banking system works, and that's what I find fascinating about it.
Yeah, it is a kind of, it's an amazing infrastructure underneath that's almost invisible until someone like Strike pops up and funnels all of that power into their startup business, and then it really pops up on the map. It's quite interesting. So if you imagine, I'm going back to my same refrain here about hierarchies and structure. If you imagine the way the pound works, or the dollar, or any other national currency, you have the central bank, the issuing bank, and then all the other banks. And then for payments, you have these other networks, other layers, like the debit card issuers and the credit card issuers and so on, who do all the hard work of moving the tiny transactions around to buy a cup of coffee every day or continuously, and they should never go down because it would be a crisis. That's very expensive and critical to the fabric of our economies. So with Strike, on the surface, to the user, they're doing more or less the same thing. It's just, as Tony says, you don't happen to have a bank account behind it with your balance that's being spent. What you do have is the Bitcoin network, which is there to imbibe the notion of a Bitcoin unit of currency with these commodity-like properties. And it's a kind of, you can think of it like a settlement network, large chunks of value moving around quite slowly in terms of digital, but quite fast in terms of the rest of the world. But not doing our cup of coffee spending. It's not built for that kind of capacity. So on top of that came along something called the Lightning Network, which is another decentralized network, operates in a very different manner, but settles to the Bitcoin network. And that gives you very high capacity globally. So in the way that Visa, if Visa is currently supporting some major currencies around the world and all the cities and nations and so on. They need X amount of capacity. They need big data centers that are replicating on the back end and so on. But you get that very instant payment experience, but the settlement is very long. It can take hours to months, depending on kind of what level you're interrogating. And there are costs associated with every transaction that get passed on to the consumer eventually. Lightning Network does the same thing for Bitcoin, but even more so. It allows you to create, instead of one global broadcast system where everybody's looking at the same ledger, you and me can create our own sort of mini ledger consensus network. You guys can over there, you guys can, and then we can bridge them all together and flood each other with transactions at great speed at almost no cost, and achieve something like a Visa but on steroids, as long as you're talking Bitcoin. Now, not only does it have these interesting capacity qualities, it also has this very open nature to it, where Visa is a permissioned ecosystem. If I want to accept Stripe payments using Visa and so on, that requires approvals and authorizations and enrollment and signing terms and agreements and so on. And if Visa don't want me, I have no choice in the matter. That's it, I'm out. I can appeal to MasterCard maybe for an alternative. But the Lightning Network is open. So someone like Strike, who offers a very familiar payment experience, simply attaches themselves to these new open rails, and they can become interoperable with any other centralized sort of friendly user experience app that is also out there on the Lightning Network, such as Square, I think. Is this a household name, Square? Cash App? So these are the big players who do very similar thing to Strike, but they're more established. And now partnerships are being built with point-of-sale terminal providers and other kind of big players in the old world are now getting attached to this. And that's very exciting. So the question is, but who's going to spend Bitcoin on their coffee? Like, it doesn't really happen, right? Even if the infrastructure is brilliant, it's a weird currency, we're not used to it. So Strike said, okay, you can pay with dollars using Bitcoin. And the way we'll do this is we'll debit you send us your Bitcoin through the Lightning payment for the amount equivalent to your cup of coffee. We will fire it off through the network, route it where it needs to be, and at the endpoint switch it into dollars for the merchant. So the merchant doesn't care, they're getting the dollars they need, or vice versa. So at any point you can be sending either dollars or Bitcoin sort of at the gateway, whether it's incoming or outgoing, and in the middle it communicates the value using Bitcoin. So it's a nice way of introducing service providers at the gateway points who can do all of that interfacing with traditional systems using these modern rails in the middle. It's exciting if you're me.
There was a funny thing I saw the other day. I don't know who wrote it, but it said Airbnb had no houses, Uber had no cars, and now crypto has no users.
I'm going to draw the line there and say to you both, thank you so much. That's been fantastic. Hours whizzed by, and I'd just like to thank you on behalf of all of us for coming down here and spending with us. Thank you very much.